The most asked question on all finance subreddits is people asking for the best investment, especially from you expats that are not that familiar with investment options here in Germany. But don't you worry, because we will clarify in this video what the best investment is for you. No matter if you have 1,000, 2,000, 10,000 because you got hit by a truck, ouch, 50,000, 500,000, or 2 million. Ready? Let's go. Is there one single investment out there that is hands down the best for absolutely everyone? No, because then we wouldn't need a video. The best investment depends on these three factors. What's the time that you would like to invest? The longer you want to invest, the more options you will have, and the more risk you can take. The perfect example for this comes from the German Stock Market Institute. And I know this looks confusing, but stay with me, it's not rocket science. We are seeing here the return of 50 years that the German DAX, the index of the 40 biggest German companies, exists. If you have bought the DAX in 2021, take a look at the right scale, and sold the DAX in 2022, take a look at the bottom scale, then you would have lost 12.3% in just 1 year, minus 18.3% if you would have bought in 2017 and sold in 2018, minus 40% in 2007, and almost minus 44% in 2001. Investing in the stock market for just 1 year can be extremely risky. And not just in the German stock market, it looks the same for the global stock market. But the longer you stay invested, the further you go down to the bottom right corner, the higher the chance to make a profit. In fact, after 10 years of being invested, there are only 3 years in German history where you're still slightly negative with only minus 1%. And after 12 years, you would have always made a quote-unquote guaranteed profit. Just keep in mind that past performance is no guarantee for future results. And that's why time is so essential when we want to determine the best investment for ourselves, because it allows us to increase the risk without going into full gambling mode with our hard-earned money. And the last factor, of course, one of your guys' favorite topic, taxes. Because taxes that you have to pay decrease your return, while tax benefits increase your return. With that being said, let's start with the most boring, but also the most important investment that everybody needs to have, a savings account for your emergency fund. And because German banks usually give very little interest, you can make the most of your money with our calculators that show you the best savings accounts in Europe. With a flexible savings account, you can get up to 3.85% interest and you can access your money daily if you want. And if you're willing to lock your money away, for a year for example, you could get up to 5% interest. Both calculators are linked in the description, so check them out. Because every once in a while banks offer a sign-up bonus. You can get up to €100 bonus by clicking the blue buttons in the calculator. And that's why these high-yield savings accounts are absolutely awesome to park your money for a year or two, because you get a good return and your risk is zero. Even if a bank would go bankrupt, €100,000 are insured by the local European government. And that's why we didn't include bonds in our list here, because these high-yield savings accounts are better than bonds on every single level. What about taxes? Every profit that you make above the €1,000 a year tax-free threshold will be taxed with 25% capital gains tax. It's not pleasant paying taxes. I feel you. So let's talk about some tax-free investments before we come to the investments that give you tax benefits. Precious metals like gold or silver can be really great if you want to invest for more than 1 year. Why? Because our tax authority, Finanzamt, considers precious metals not as an investment but as a special asset. And special assets can be sold completely tax-free after holding them for at least 1 year. You just need to be careful how you buy your gold, because gold ETFs are not tax-free after 1 year. They are never tax-free, in fact, because they're considered investments, so they're taxed with 25% capital gains tax. We talked about that in our precious metals guide, that you have to buy gold physically if you want a tax-free sale. Now, this is the perfect opportunity to talk about investment return and taxation of your investment. Taxes should never ever be your number one criteria when it comes to making an investment decision. Tax-free profits are nice, and tax benefits are even better. Don't get me wrong. But if your investment sucks, you wouldn't pay taxes anyway. So the first important question is whatever you might have, a good investment that makes a nice return? If so, perfect. Then let's try to structure it in a way that is the most tax efficient for you. Was gold a good investment? Yes, it was. Since 1971, when the US ended the gold standard, gold had an annualized return of 7.98%. Pretty good if you ask me. But keep in mind that there are also periods in which gold loses about 50% of its value, which means you may have to invest longer than a year eventually. So, now that we know that gold has been a good investment, you can invest in it in the most tax efficient way possible. And our video shows you exactly how to do that. Very similar to gold, at least from a tax perspective, is another special asset, crypto. Now, there's usually two sides to this almost religious debate about Bitcoin and friends. On the one side, you have Bitcoin enthusiasts like famous fund manager Cathie Wood, who thinks Bitcoin will go to the moon. She expects the financial superhighway to go to 3.8 million. And if I was in her shoes, I would hope the same, because she has a casual 75 million of her net worth invested in Bitcoin. And on the other side, you have credible economists from the European Central Bank that say the fair value of Bitcoin is zero. Who's right in this discussion? I don't have the slightest clue, and so does everybody else. And I don't want to be part of this discussion. But I can tell you one thing. Be prepared to lose it all when you invest in any cryptocurrency. You might make a lot of money with it. Okay, but you can also lose it all. A little bit like the casino. So maybe take a very small percentage of your net worth and try it out if you really want to do it. But please don't be stupid and gamble your hard-earned money away. Speaking about stupid, a lot of people might tell you it's a great idea to invest in stocks. And I respectfully disagree. I love the stock market. Don't get me wrong. It's what got me interested in finance in the first place and eventually allowed me to found PerFinEx and make these videos for you guys. The stock market's great, and I am thankful for everything it allowed me to do. But should you invest in stocks? Probably not. Let me explain. The stock market is contrary to the real estate market, very transparent, very fast, and very efficient. There are countless professional traders out there, be it private or big corporations, that put in more effort than you or me ever could. And some of them get a great return for their effort. But does that mean that stocks offer a great return in general? Now, here's an interesting study from the University of Arizona that shows that over the last 90 years, 96% of all stocks had basically zero return. And just 4% of all stocks account for the 16 trillion wealth creation of the entire stock market. Now the question is, do you think that you can find these 4% of all the 1,000 stocks out there at the right time? If you really do, and you make a profit, everything above the 1,000 euro a year tax-free threshold will be taxed with 25% capital gains tax again. If you have at least 5 years that you want to invest, remember the German DAX chart from the beginning of the video, and want to invest in the stock market, I think the better option for almost every one of you watching are ETFs. ETFs, exchange traded funds or mutual funds, are basically a basket where you put in many different stocks, bonds, properties, whatever. And this allows you to invest in literally thousands of different stocks all over the world with just a couple of euros. And why is that better than buying individual stocks? Because you get instant diversification without having to invest millions of euros in a very complicated portfolio. And you know what I say all the time? Diversification is key to investment success. Just keep in mind that ETFs can also fall 40% or 50% within just a couple of months. Doesn't happen that often, but it did happen in the past, the 2020 COVID crash, for example. And it will happen again. Just nobody knows when, why, and how bad it will be. So, you better invest for the long term. And if you want to invest really, really long, then I'll tell you in a moment how you can avoid paying the 25% taxes on your ETFs. But before, we have to talk about your guys' favorite investment, the Bausparvertrag. We published a video just a couple of weeks ago explaining why it is not what your bank tells you it is when they want to sell you a Bausparvertrag. Usually, you have to pay a lot longer in it than you think. We calculated in the video that someone has to pay 41 years into his Bausparvertrag before he can access the money. And your interest is so incredibly low compared to the costs, which means your money will slowly but steadily get less and less in the Bausparvertrag. So the 25% capital gains tax here is just theoretical because nobody makes money with a Bausparvertrag anyway. You are here. You want to buy a property, which is here. And in between, your bank tells you that there's a Bausparvertrag. Let's get rid of this, the Bausparvertrag, and let's go straight from where you are to real estate. Real estate can be an awesome investment if you have an investment horizon of at least 10 years. Why? Because after that, you can sell your investment property completely tax-free. And this is just one of many tax benefits you will get when investing in real estate. You can also deduct your interest for your mortgage, depreciation, renovations, and much, much more. But only with rental properties, not if you live in the property yourself. And that's why we are big fans of renting and not really fans of buying. If you want to know what's right for you, then check out this video and learn all about the financial and lifestyle arguments of this discussion. Now, let's talk about the risk of real estate, which is an important topic to me because I feel that we have a different approach here than a lot of other people. Real estate in German is also called Betongold, so concrete gold, because it's such a safe investment. But is that so? When you get a mortgage, the bank will get their money back from you, one way or the other, sooner or later. For most people, it luckily works out and their property grows nicely and everything goes well. But there are also some cases, which means that all hell breaks loose. And if you want to see one of these examples in detail, then check out this video. And that's why real estate is actually the only investment on this list where you can lose more money than you invested. So more than minus 100% is possible here if you owe the bank more than your property is worth. And so this doesn't happen to you, you can find our selection of the finest properties in Germany on perfinex.de/properties. And if we can help you along your investment journey in general, then let us know by booking a free meeting with us on perfinex.de/meeting. I promised you earlier on that there's a more tax efficient way to invest in ETFs, and here it is. Level 1 pensions allow you to deduct your contributions with your personal income tax rate. So depending on how much money you earn, with up to 42%. That means if you invest 100 euro and file your taxes, you get 42 euros from the German government, which you can invest again. So with this little trick, you not just shield yourself from taxes, but you also get a 42% bonus when investing in ETFs. Level 3 pensions are different. Your ETFs also grow tax-free until you take money out of your pension. So far, so the same. But level 3 pensions offer tax benefits when withdrawing, not when investing. And the tax benefit is exactly 50%. So while you would pay 25% capital gains taxes on ETFs in brokers, you pay 12.5% on pensions level 3. As you can imagine, these tax benefits take a while to develop their full effect. And that's why pensions are really for the long term. Best until retirement age, of course. And this time horizon also answers the question we get probably asked the most. Should you buy ETFs with a broker or with a pension? It depends mainly on the time that you'd like to invest and a couple of other factors, of course, that we explained in this video. Generally, the return in both will be the same, given that you invest in the same ETF. And that's why the risk is also the same. Let me know what you think about our list and what you think the best investment is. Maybe we forgot something. I thank you for watching and I'll see you in the next one.